So good afternoon, good afternoon, good afternoon. We had to do our chart breakdown yesterday. That was Tuesday as we usually do, but I just entered town yesterday, so I was very busy and I was very tired. But nevertheless, today, Wednesday, the 9th of April, we are going to do our chart breakdown for this week. And before I want to do chart breakdown, if you have noticed, the market has been crazy for the past 1 week. The market has been crazy for the past 1 week. So if we have to talk about that, I'm probably going to do a video about that. But as of now, we are seeing a lot of changes in the market. A lot of changes in the market. This is simply what we usually say. You cannot really say you know the market that much. So when you have been in the market for a certain period of time, like now, during the Biden's administration, the market was kind of slow, respecting those key levels. I mean, you could still do anyhow and still really do well when it comes to trading. The market was very slow, no much activities going on. But since Trump got in, it has been a hell of changing one policy to another. And these policies are affecting the market drastically. You could be on a trade now, and all of a sudden, you look at Bloomberg, Trump is there giving a speech, and that speech, in one way or the other, affects USD. If the speech affects USD, you are on a USD trade, that is how it affects your trade, right? So there's a lot going on in the market. But now, the truth about it is that the market is going to be stable with time. But now that the market is not stable, how can we do to make sure that we still stay relevant, to make sure that we don't blow our account during this period where the market is very volatile, the market does not respect some key levels at times? What can we do? I'll start by saying that on a normal, if you are trading using proper risk management, it helps you, it guides you a long way, right? If you are trading using proper risk management, it guides you a long way. But aside of trading using proper risk management, we need to pay attention to our confirmations. You don't just have to rush to place your trades. You have to pay attention to more confirmations. You have to pay attention to what is happening on the higher time frame than what is happening on the lower time frame. Because now on the 15-minute time frame, if you are looking at your entry confirmation just only on the 15-minute time frame, let's say, for example, there's a news going on now, or maybe there's a speech going on now. Whatever that speech is about, or whatever Trump is saying in that particular speech, is affecting the market at that time. Probably in the next 15 minutes, you affect the market. The market will be volatile for the next 15 minutes. Now, take for example, you look at your confirmations on the 15-minute time frame. Maybe a 15-minute candle has break a key level. Now you're looking at entering, saying, okay, maybe a key level is breaking. Now it's time for me to enter maybe on a sell, for example. On that 15-minute time frame, when that speech is over, the market goes back to normal. You see now that you have fallen into the trap of fake breakout. You see that you're falling into a trap of fake breakout, right? Whereas if you pay more attention to your confirmation, let's say, okay, you're waiting for 1 hour candlestick confirmation, you will not have fallen into that trap, right? On a normal, I mean, I used to even look at, so at times I'll take these confirmations on the 15-minute. Take these confirmations on the 15-minute, it worked well. But as of now, the market is changing. What can we do, right? What can we do to see that we eliminate or we reduce this issue of maybe fake breakout, the market weakening us out and going our direction, and so on and so forth? We need to pay attention, right, to our confirmations. Probably 15-minute time frames are not that much value, especially for candlestick confirmation. Rather, the 1 hour time frame is going to be most preferable. Now, I'll show you what happened to me yesterday on gold. I was expecting this buy we have on gold today. I was expecting this buy yesterday on gold. And because I was very quick at placing that trade without waiting for proper confirmations, that trade hit my stop loss. It was after the trade hit my stop loss, I looked at it again. Like I always say, when you have a losing trade, look at the trade again, right? Look at the trade again and see what went wrong. After I look at that trade again, the candle that actually break that I was looking at the continuation was a 15-minute candle. Now, after that 15-minute candle closed, I'm looking at it now. After that 15-minute candle closed, right, the next candle that came in was the sell candle. You get? Now, before that candle, let me see if I can share my screen, my trading view. Let me open my trading view. So while my trading view is opening, right? So basically what happened is that I was on the 15-minute time frame, right? wanting to really take trades bad enough, because on Monday I had not placed trade, Tuesday I had not placed any trade. Wanting to really take trade bad enough. No, I think on Monday I had a losing trade. Monday I had a losing trade. Yesterday I still had a losing trade, right? Now, that's just to make you understand that the losing streaks are very okay. But now, looking at what happened yesterday, what happened was that trade. Let me see, my trading view has opened. Okay, let me share my screen. Trading view. Now, look at this, my trading view here. This is where I took that trade yesterday. Now, what happened was that placing a trade at this point, when this candle closed above here, the next candle was a buy candle that went up to this level. You see that? So this is my key level at this point. The candle closed, right? The next candle comes in as a bullish candle. But now, it was on a 15-minute time frame. It was on a 15-minute time frame, right? At this point, if I had to wait for 1 hour, if I was patient enough to wait for, okay, the candle has break that level, let me wait for 1 hour candle close. If we go to our 1 hour time frame, you're going to see. Let me wait for 1 hour candle close. You're going to see that if I had to wait for 1 hour candle close, I probably should have had this clear confirmation that this market is going to sell back to the downside. Pay attention to this candlestick we have here. Pay attention to this candlestick we have here, right? If I was patient enough, I'll see clearly that we have a continuous push to the downside because the market actually took back this buy candle from up here, rejected it back right down to this level. Then the next candle was a bearish candle. You see that? Because of that one lack of confirmation and being patient to actually wait to see that 1 hour candlestick react to that zone, I fell into that trap of taking that losses for yesterday. Now, the trade finally went back down, and it is today that it has finally break that level, right? It is today that we have finally break that key level. We will go down to the 15 minutes back. So you see that it clearly came down, consolidated, and it break that level. Let's look at the 1 hour chart. You see that the 1 hour candle closed as a bullish candle, closed above, and the next candle came in with that high momentum, a clear push to the upside, right? Clearly you can push through the upside. Back to the 15 minutes. Now, where are we now, and what is our next move we are looking at on gold, right? Where are we now, and where is our next move we are looking at on gold? So I'm using my trading view where I've already done mark my key levels already. All of these key levels you see on my chart is not today I've marked them. They are basically key levels that I've respected in the past and are simply respecting themselves again and again in the future. Now, on this 2 hours time frame, I'm seeing a rejection here. This rejection is too huge. But let's see the 1 hour time frame. And in the 1 hour time frame, that is where we are, right? So the market has actually break this key level, gone up, came back down to confirm, to retest that level. I made mention of this with the students in the morning in class. And when the market comes back to this key level now, we are going to be looking for our entry. But looking for our entry on the 1 hour time frame, what do we have there? Okay, on the 1 hour time frame, candle has closed, and the next 1 hour time frame candle is a bullish candle. So if we are going to place a buy trade on this retest, now where is our target? I don't want us to target this previous high. I'm looking at the next previous high. Though our first target should be this previous high, then the next target is going to go up here, right? The market respected this level for a reason. So you probably will come up to respect this level again for the same reason. But I'm looking at a situation where the market pushed with high momentum to the upside to see that it can actually break this level. Why? When the market buys and goes up, this is what happens. Some of you took this buy trade. But as it is rejecting and coming back down now, you are very scared of the rejection. Now you rush and close your trade. There's something I always say when it comes to rejection. When the market breaks a key level and goes up like this, it needs to come down to retest to gain strength. It needs to come down to retest to gain strength before it actually goes up and take now this high. So it's probably going to go up now and take this previous high. But this coming back now is to come back to gain strength, is to come back for those who missed this entry to have the entry again. How many people miss this break? Because it probably went up with high momentum. When it breaks, it goes up with high momentum. So the strength is always very huge. So if you look at just from the candlestick itself, you're going to see that it was a very high momentum candlestick, right? Now at this point, it has come back. Now we want to look at the reactions of the market at this zone to look for the next push to the upside. So what we are anticipating here is a clear push to the upside. So right? So we are anticipating here is a clear push to the upside. So we are anticipating here is a clear push to the upside. So what we are anticipating here is a clear push to the upside. So what we are anticipating here is a clear push to the upside. So we are anticipating here is a clear push to the upside. So we are anticipating here is a clear push to the upside. So we are anticipating here is a clear push to the upside. So we are anticipating here is a clear push to the upside. So we are anticipating here is a clear push to the upside. So we are anticipating here is a clear push to the upside. So we are anticipating here is a clear push to the upside. So we are anticipating here is a clear push to the upside. So we are anticipating here is a clear push to the upside. So we are anticipating here is a clear push to the upside. So we are anticipating here is a clear push to the upside. So we are anticipating here is a clear push to the upside. So we are anticipating here is a clear push to the upside. So we We are anticipating this push to the upside. But we have to 1 hour candle. How is the 1 hour candle? How 1 hour candle doing there? Let me see. We had a bullish candle forming. We have a bullish candle forming on the 1 hour. Clear retest of structure. So if we are going to have our trade here, you see why I keep going back to the daily time frame for a reason. To the 1 hour time frame, sorry. I keep going back to the 1 hour time frame for a reason. So we are going to have a 2.5 risk to reward ratio if we are placing this trade and our stop loss is right below here. Perfect. So we are going to place this trade here for a buy, and I'll remove this right here. For a buy, our stop loss is below this consolidation. The market has respected this level. Now let's get back to the 1 hour time frame. Most interested. On the 1 hour time frame, the market has break these levels clearly, which has been respecting for the longest time from yet 7th of April. So we had to anticipate this break. It did not happen. We anticipated this break. It has break to the upside. Come back, we test this zone, and we are having a push to the upside. We are having a push to the upside at this point. So 15-minute time frame to get our entries. And I'll place this trade right here. First take profit is here. So I'm going to place open 2 position. If you want to place your trade, I'm going to open 2 position. And the 2 position, I'm going to close. The market is pushing up already though. The 2 position, I'm going to close the first position when it gets up here. Then I'll move my stop loss to my entry and let the trade run, right? Now, if you are placing the trade, remember to apply your proper risk management. I am placing the trade on my main portfolio. I'm risking 5% on my account. If you have a prop firm, risk highest 1%. Risk highest 1% on your prop firm. Or 0.5% even. Are we in on the trade already? You actually had the trade early. You should be in profit by now. Basically writing my screen the last time. If you write again, I'm going to move it from the live. So if you have entered early, you should be in profit already. So like I said, right, we are basically going to have our take profit one up here on this previous high. I guess we all know why we are having our take profit one on this previous high. Because probably the market is going to respect this high again. The same reason why the market respected this high is the same reason the market is probably going to respect again, right? But now, when the market breaks a key level, what happens is that it goes up, the first high it respects, it comes down, right? Gain liquidity. You are entering the trade now. We are entering the trade now, right? So we are bringing in more money into the market. So the probability of the market taking out this previous high to give us the next high is very possible. You see that? The probabilities of the market taking this high to give us the next high is very possible. But we are not going to neglect the fact that the market has respected this level for a reason. We are not going to neglect the fact that the market has respected this level for a reason, right? So we are going to have our take profit one here to secure something, at least. Then, if we have our take profit one at that point now, we can move our take profit for the second position and put to entry. So that's the reason why I opened 2 positions. I'm on 1,500. Let me see, how much are you making? How much are you making? I see I am up 78. I am up 1,600. Unbelievers will cry. I am up $5. Why the unbelievers they cry? We are making money. That's basically it. So let's see how it goes. I am in loss. This person in loss. Probably you are just entering the trade now. You are entering the trade now. Maybe you are entering the trade late. But regardless, like I said, rejections will always come in, right? So the rejections are just like the market is coming now to give opportunity for those who had not entered to enter. Remember, if you imagine that the market had break and gone up straight, will we have this entry? No. So the market went up, lack of liquidity, it came back down, and we are pushing to the upside. So the rejections, these rejections are always coming down to gain more strength, to gain more power, then it push to the upside. I am up $160. I am up $100. I am up $11. Was thinking you will send a signal. We are all here analyzing the trade together, and I'm saying we should enter. Do you still need the signal again? I am up $4. I am up $100. You don't probably not need me sending signal again now. Though I have to send a signal maybe to the VIP. That's the people I should be worried about even. But this Zoom session I sent to the group, so you don't expect me to come and send signals again when I'm struggling to place my own trade. So if I'm trying to send signal, I'm struggling to place my own trade. What happened? I'll miss my own entry. Any other pair we should look at? Any other pair? Any other suggestion of any other pair we should look at? Any suggestion of any other pair we should look at? In less than how many minutes we are already making money? That is trading for us. Euro USD. Let's analyze Euro USD. Please, it's okay. Don't float places. Just once is enough. Saying it once is enough. There's no need for you to float the chart section with that. So let's look at Euro USD. Just opening Euro USD on the 5-minute time frame. I'm looking at Euro USD should continue buying. Euro USD will continue buying. It has been on an uptrend. Clearly, you don't need to even take much time to analyze this market. It has been on an uptrend. And if you look at the uptrend very well, it left here, break this minus zone here. Now come back to retest. We already have 1, 2 rejections of 15 minutes. So I just have to look at the 1 hour time frame to be sure. So on the 1 hour time frame, we have like this bearish candle rejecting. So 1 hour time frame, let's see how this candle reacts, right? Let's see how this candle reacts. But this candle still has time. This candle still has 42 minutes before it closes. Probability that the market is going to break to continue going upward. It has already break and coming back down to retest. You probably break, continue upward. So if I'm looking at Euro USD, this is what I should be looking at on Euro USD. This is what I should be looking at on Euro USD. I should be looking to go long on Euro USD. And I want my stop loss down here below this trend line. Then I'll see where next target should be. Next target should be on the previous high. So Euro USD, this is what I see for Euro USD, continuation to the upside. Actually, 15 minutes. That's what I see on Euro USD for those who are looking at Euro USD. Which other pair again? One other pair. Meanwhile, gold is still moving. I hope we are all milking. Why is someone making all this small money? What's happening here? Let's look at GJ before I end. Let's look at GJ and look at BTC. Let's see BTC. Let me see what BTC is doing. I'm not really a fan of trading BTC, except I am tempted to trade over the weekend before I can look at BTC. Let me see 1 hour time frame. The market actually came and rejected the key level. I don't even remember the last time I came to this chart, but it shows that this is a key level I have marked long time ago. See that the market has come back and respected this level which I have marked long time ago, but I don't even remember. Oh, BTC. Let me see 1 hour. BTC will go back down here. BTC will likely respect this level up here like this and push back down. It's already rejection. Even this bullish candle has rejected. This one too is trying to reject. So if you see 15 minutes, the market might likely push back to the downside. BTC might likely go like this. But this analysis I'm giving you is not really accurate. So pay attention to it. Let's see what BTC might likely go back down. It might likely push back to the downside. Down, you don't know how far. If it's going to come and break this level, to come back down here. But that's what I'm looking at on BTC. That's just a rough analysis. I've not actually taken time to actually mark like, okay, my key levels. I'm not taking time to actually be like, okay, let's see if I have a trend line here. The trend line is respecting the third time. And while respecting the third time, there's also a resistance level there that has been break. So yeah, possibility of BTC going down is high. Possibility of BTC going down is high. So that is that. How much are we on now? Let me see. I'm on 2,000. 2,000. How much are you making? Let me see how much you are making. Let me see how much you are making. Let me see how much you are making, guys. On the chat section, let me see how much you are making. I'm on 2,000. Let me see how much you are making. $800, $10, $7, 86, 13, 900. Let's keep holding investment. Right, so we're going to hit our take profit one. Miss entry. Sorry about that. Probably you came late. So I did not send this signal to the free Telegram so that those who are not attending the live chat breakdown will not get the analysis. So it's mainly for those who created the time to attend the live chat breakdown. It's completely free. I expect each and every one of us to create time to attend. $100, $210. Okay, so I did not send the signal to the free Telegram. Probably those who are going to be watching the video later on, always try to catch up with the live chat breakdown every Tuesday, 1:30 p.m. Right? So if it's not going to hold on Tuesday, I will notify you guys and tell you that, okay, we are going to have it like today. Right? So if you missed the entry, sorry about that. If you missed the entry, I am so sorry about that. But yeah, that's it. Everybody is making some profits. So I'll just end the chat breakdown now. Those who missed the chat breakdown, make sure you go through the recordings. If you're just joining late, make sure you go through the recordings. If you do not come from Telegram, just click the link down below this video and join Telegram. That's if you're watching on YouTube. Any questions before I go? Any questions? Let me answer questions. Let me answer questions. Let me answer questions. Let me answer questions. Anyways, we're going to hit our take profit. When we hit our take profit, I'll probably close with around maybe 2,500. And that is it. How many minutes have we been on this call? How many minutes have we taken to analyze this trade? This is more easy. For me personally, I think it's more easy, right? So you just basically have to wait for your confirmations. Don't rush to get in your trade. Keeping it very simple. You have not seen any complicated thing on my chart. I've not explained any complicated thing that somebody will not understand. Even if it's your first time joining this chart breakdown, if it's your first time, you probably should have understood what I did here, right? So it's as easy as that. The main thing now, you keep your risk management intact. The main thing, you keep your psychology intact. We could have entered this trade and go against us, right? Fine, our risk management is intact. But so far, so good for all the chart breakdowns that we have been having. All the trades we have taken on doing our chart breakdowns have been successful, right? So I hope we keep going like that. But now, personally, I am just recovering from my losses. This profit today is I am just recovering from the losses I made yesterday. So it is what it is. Some of you probably are just taking this trade today. You are making a profit. Maybe you did not make losses yesterday, which is very fine, right? So that is trading for us. Keep it simple. Apply a proper risk management. Keep your psychology intact. And I bet you everything is going to be perfectly okay. And like I said, I'm going to be doing a video breaking down how we are going to be approaching the market situation as of now, because it's really crazy. If you are not patient enough, if you don't apply proper risk management, before the market wants to gain stability, you must have probably blow off all your capital. So I don't want that to happen to any of us. And that's why I'm going to be doing a complete video, let's say 30 minutes to 1 hour, on what is actually happening in the market as of now and how we can avoid that. So stay tuned for that video. Okay, so let's check the updates on the trade so far. Let's check the updates on the trade. Trading view. Okay, let's check the updates of the trade so far. So these are our trades so far. Like I explained earlier, right? Normally, when the market breaks a key level, you always come back to retest. Now, when it comes back to retest, the probabilities of the market breaking the previous high is very high, because when it break and went up, most people missed this entry when it went up, right? So coming back down now, most people are entering at this level. So the liquidity that comes in now is more. And when there's more liquidity that is coming in now, the probability of the market breaking the previous high is going to be very high. That's why I say we should open two positions. Your first take profit on the first position, then your second take profit on the next high above. Then you move your stop loss to entry when the market breaks this first previous high, right? So I hope you have moved I hope you have secured some profit, right? Hope you have secured some profit. As of now, I have secured my first position on $4,000, and my second position is still running on $3,000 now, right? I don't know, yours might be small depending on your account size, but we have all made profit. So see you guys on the next chart breakdown. Peace out.